So welcome back to another tutorial session with Grand Majors Academic Support Services. Today we'll be looking at job costing, right? So what is job costing? So we're saying it's one of the methods of product costing that accumulates costs per job. So it's really finding the cost to make and to manufacture, to produce an item, or in some cases, a job, right? That's what they call their producing of products, right? Each job has its own unique characteristics and is usually manufactured or done to customers' order, right? So it's done to order. So you come, you say you want, let's say, a furniture, right? Company, or just as entrepreneur, a sole proprietor, and you want me to make a bed for you. So your bed, it will have specific characteristics. If you want any carving, customization with the name, and it would be done as per your order. I wouldn't have beds in my business as a sole proprietor, right? Making furniture with the same carvings or with initials. That would come when a customer comes to me and say, okay, this is the type of bed that I want, right? These are the characteristics that I want that are unique for me and my design. So essentially, job costing is a specific order costing system used for costing job, finding the total cost for jobs made to a customer's order. They're generally completed within an accounting year. And we know whatever financial statements that we're doing is usually for an academic year, right? And that's usually 12 months whenever the business starts. 12 months beyond that, that's the accounting, period or year. So what's the process in job costing? So the process, similar to a lot of businesses with a little tweaking, but very much similar. So it starts with the purchase of materials, right? So going back to the furniture company that I might own, right? I'm going to need to purchase wood, ply, nails, certain tools, a hammer, etc. So I'll have those materials. So you will have to do in accounting your journal entry for that, right? Once I have now started production, I have to move these materials into production, and that's where it goes to working process account. So that shows that, okay, I have now started the process of making this good. On completion, right, you have to now transfer all that production cost, the total production cost, you transfer it to close the working process account. Closing the working process account, you're moving it to finished goods, where that is where the point coming where we're debiting finished goods, right? It can be finished goods or it can be cost of goods sold. So if the good is not sold, it will go in finished goods. But if it's sold, we'd be debiting cost of goods sold instead. So that was just a little process for you to see the job making process. So let's look at a question in terms of job costing. And a point to note is that we're still looking at the major elements of production, right? And this includes direct material, direct labor, and our manufacturing overheads. So those principles that we would have done in past videos and tutorials, they still apply. We're just adding to them. So let's go to our question. So our question says, the Solomon Company uses a job costing system at its Dover, Delaware plant. The plant has a machining department. Its job costing system has two different costs, two direct cost strategies, direct materials and direct labor. So two direct costs, and we know what our direct costs are, our direct materials and our direct labor, and those are directly traceable to the product, right? And it has two manufacturing overhead cost pools. It has the machining department, and that allocates using machine hours. Let me read that again. It has two manufacturing overhead cost pools. These are the machining department, allocated using machine hours, and the finishing department, allocated using manufacturing labor costs. And below you have the 2002 budget for the plant. But what I want to point out before we try to look at the questions that they're asking us for, this statement, it's a very important statement, right? The two manufacturing overhead cost pools, the machining department that allocates using machine hours, and the finishing department allocated using manufacturing labor costs. So just by this sentence, something should click, right? We should get something from this statement. And what exactly is that? We're saying that these are the cost drivers for each department. So it's the manufacturing overhead cost is based on the machining department, totals in the machining department and totals in the finishing department together, right? However, in the machining department, overheads are allocated, right? Cost is driven based on machine hours. In the finishing department, overheads are allocated. Cost is driven by manufacturing labor cost. So just wanted to point that out. So continuing, the 2002 budget for the plant is as follows. And as I said before, it's two departments for overheads. So you'll be getting information in terms of manufacturing overheads for both departments. So we have our headings, manufacturing department, machining department, and finishing department. And information that we have here, based on this is the budgeted. So this would be budgeted overheads, right? Budgeted direct manufacturing labor costs, budgeted manufacturing labor hours, and we have machine hours. So from the get-go, we can find, we would have seen our cost drivers, right? For the machining department and for the finishing department, right? Based on the sentence there. So what the first part says, what is the budgeted overhead rate that should be used in the machining department and in the finishing department? So the budgeted overhead rate is our OAR. So that's what it's asking us to find. And as you would have seen, the formula for OAR is total estimated overheads divided by total estimated units of our cost driver. And there we have what our cost driver is. Going back to the question, let's talk it out. So what do we have? We know the formula. Total estimated overheads divided by total estimated units of the cost driver. What do we know? All right, we know what our cost drivers. For the machining department, it's gonna be our machine hours, right? And for the finishing department, it's gonna be our direct labor cost. What now do we need to find? Based on information that we have here, we need to find what? Overheads, total overheads. So let's look at what this looks like for the machining department. So overheads for the machining department is 10 million. And its cost driver is 200,000. So 10 million divided by 200,000 gives us what? $10 million divided by 200,000 machine hours, let me correct myself, gives us what? Do the math. That should give you $50 per machine hour, right? So that's the OAR for machining department. And we need to do the same for the finishing. The formula is total estimated manufacturing overheads divided by the total units of the cost driver. The overheads for finishing department is $8 million, right? What was its cost driver? It's not machine hours. Let's get that clear. Machine hours was only for the machining department. If we're supposed to go back to the opening paragraph, it says the finishing department allocates, right? What drives its cost? Manufacturing labor cost. Here you have labor costs and labor hours. So be careful what you're using. So the cost driver for the finishing department is $4 million. So $8 million divided by $4 million gives us 2 times or 200% of direct manufacturing labor costs. Here we're saying dollars into dollars. Dollars into dollars gives you times or a percentage. For the machining, it was machine hours into dollars. That gives you dollars per machine hour. So let's look at our OARs. So we're saying for the machining department, our OAR is going to be $50 per machine hour. And that would be based on our discussion that we had and we did the math together. And for the finishing department, our OAR is either going to be 2 times or 200% direct labor costs, right? Let's look at B. So B says, during the month of January, the cost record for job, so this is now the cost for a job we're looking at. The cost record for job 431 shows the following. And remember, it's gonna be both departments, machining and finishing. So you have your direct materials used, right? You have a direct labor cost, you have a direct labor hours, and you have a machine hours for both. The question asks, what is the total manufacturing overhead allocated to job 431? What is our manufacturing overhead allocated? What's the formula for that? The formula for allocated manufacturing overhead is the actual cost driver, and this is the actual cost driver as it pertains to this job, times or multiplied by our OAR. And just for you to see what was our OAR based on what we calculated before. So we have our OARs, right? What we need now to find is our actual cost drivers. So let's look at it. For the machining department, and again, we found what? 2 OARs. So we need to find 2 manufacturing overheads, right? So let's look at it. What is the actual cost driver for the machining department? It's gonna be 130 what? Machine hours. Machine hours is our cost driver. So looking at this part of the question, we have to use the 130. We can't go back up here. We have gotten new information right here. So you have to use this information, right? So for the machining department, our actual OAR is 130 machine hours. Our actual cost driver, sorry, is 130 machine hours. And the OAR was $50 per machine hour. When we multiply that, right, because it's actual overheads times the OAR, we'd have gotten what? 6,500, right? Now we can do the finishing department. The cost driver for the finishing department is what? Direct manufacturing labor costs. We go there and we see that's $1,250, right? Or OAR for finishing was 2 times or 200% off, right? So multiplying 1,250 by 2 would have gotten what? 2,500. But because here it asks us for total, we have to know sum both. 6,500, right? So the machining department, 130 manufacturing hours, machine hours times the $50 per machine hours gives you 6,500. And for the finishing department, our actual OER, 1,250, our actual cost driver, 1,250, sorry, times our OER, which is 2, gives us 2,500. And the total of that is 9,000. So our total allocated manufacturing overhead is $9,000. So we would have answered part B. Let's move on to part C. Assuming that job 431 consisted of 20 units of product, what is the unit product cost? How do we find unit cost? Unit product cost, the same thing. That is what? Total cost divided by units produced, right? Based on the question, do we have total cost? No, so we might have to find it. Do we have units produced? Yes, it says the job consisted of 20 units of product. So we have part of the equation we need to find the other part. So let's look at it. To find total cost, our total cost never changes. It's gonna be your direct material, your direct labor, and the overheads. That gives you your production cost, the total production cost, whatever name you want to call it, right? So let's go back to the question. So because this question is based upon job 431, this information here, this is the cost record for job 431. So in order to find materials and labor, etc., we can use this information. So for job 431, it went through both machine and the finishing department. So in terms of our materials and our labor and all the other elements, right? You'd have to take that from both departments. So the materials would be 14,000, right? Plus also the 3,000 from finishing. Because to do the entire job, it had to go to the machining department and the finishing department. And the same is for our labor costs. We have no use for labor hours here. This is just additional information to throw it off, right? So from the get-go, we have our direct materials, which we're saying we're taking from both the machining and the finishing department, and our direct labor, right? The next element was production overheads. And we would have calculated or allocated overheads from part B of the question. So our overheads is going to be 9,000. The sum of that, which is our production cost or total cost, whatever you want to call it, is $27,850, right? So now that we have total costs and we know units produced, we divide both, and our unit product cost is $1,392.50. So let that sink in a little bit before we go to part D, the final part of the question. All right, so part D. Balances at the end of 2002. So at the end, remember, at the end of the period is where you know your actual cost, right? So here, these are as follows. The balances at the end are as follows. And they're still having information from both the machining and the finishing department. So you have manufacturing overhead incurred. And what is this? This is your actual manufacturing overheads, right? Then you have your direct manufacturing labor cost, which is the cost driver for the finishing department. So this is the actual cost. This is what actually happened. And you have machine hours, which is the cost driver for the machining department. And this is your actual machine hours, right? So here, it asks us to compute the manufacturing overhead variance for each department. So we're going to find it for the machining department and for the finishing department and for the Dover plant as a whole. So for the Dover plant as a whole is going to be the combination of both departments, right? So let's look at what that looks like. It says to talk it out, but let's go into it, right? So how do we find variance? What is our variance? So our variance is the difference between what actually happened, or actual costs, and what we budgeted. So remember we said in either the previous video or videos before in cost accounting, right? Where most times there will be a discrepancy in your budget. And that discrepancy in your budget is what, in terms of your budget and what actually happened, is your variance, right? So it's actual overheads minus your allocated overheads. And in this case, it's gonna be based on each department and then for the business as a whole. So let's look at the machining department. What is the actual overhead for the department? You should have seen it. The actual overhead is 11,200,000, right? And for the finishing department, the actual overheads would be 7,900,000. Do we know the allocated? Not necessarily. So how do we find the allocated? What's the formula? The formula for that is gonna be your OAR, and in this case is the OAR per department times the actual cost driver. So reminding you of the OARs for both. The OAR for the machining department was $50 per machine hour, and the OAR for the finishing department was 2 times or 200% of direct labor costs. So let's do the machining department. We know the OAR, which is $50 per machine hour, right? And the actual cost driver is 220,000 machine hours, right? So to find allocated, we have to multiply the two. Multiplication, 220,000 times 50 should give you 11 million, right? Then we go to do our finishing department, right? The finishing department, its OAR is 2 times, so 2 times 4.1 million would give you 8.2 million. So we know the actual and the allocated, right? So to find the variance would be the difference between the two. So let's go back and do per department. So let's go back to the machining department. The actual overhead is 11,200,000. And we say our allocated is 11 million. The difference between the two is what? 200,000. Remember, we said also that our variance is either under-applied or over-applied. And we determine that by looking at, okay, is it that the actual is greater than the applied? If the actual is greater than the applied, it would mean that you didn't budget enough and you would have under-applied, right? But if the actual is less and what you budgeted is more, it would mean that, okay, we can pay for what actually happened and we're left with additional, and that would be an over-applied. So in the case of the machining department, which is it? We know the variance is 200,000 because that's the difference. But is it under or over-applied? What is greater? The actual is greater. The actual is 11,200,000 and the budget is 11 million. So here we're saying it's 200,000 under applied because our actual is greater than what we budgeted. Let's look at the finishing department. Our actual is 7,900,000. And we said that our allocated is gonna be 4.1 million times 2. That gives us 8.2 million, right? The difference between that is 300,000. Either way you calculate it. One you're gonna get negative, one you're gonna get a positive 300,000, still 300,000. So what we're looking at now, was it under applied or over applied? In this case, what we budgeted was greater than what actually happened. So here we're saying we over applied. So the variance for the machining department, 200,000 under applied, and the variance of the finishing, 300,000 over applied. So now that we've found the variance for each department, what is the variance for the plant as a whole? That is going to be, right, the combination of both. So the difference between the two departments is what? 100,000. So you're looking at a 200,000 positive figure, negative figure, right? Because under applied would be negative, you don't have enough money to pay for it, right? And the 300,000, a positive figure. So the difference between both is 100,000. And is this gonna be under or over applied? Which was greater? The over applied, right? So here we're saying for the plant as a whole, it is 100,000 over applied. To go back for you to see it a little clear, the machining was 200,000 under applied, right? What you budgeted was not enough. So you came in under budgeted. You couldn't necessarily pay for everything. So we're saying we're looking at this as a negative 200,000. For the finishing, our budgeted was greater than what actually happened, right? So we're left with additional cash, which was 300,000, and this is 300,000 over applied, right? For the plant as a whole, it's a combination of both departments. So if you had one department with what we're saying is a negative 200,000 and another with the positive 300,000, the combination of both would give you what? A positive 100,000, right? And that's a positive 100,000 over applied. So this is the end of this question. Remember, leave a comment below in the comment section if you have any question, if there was something that was not too clear for you, any questions that you have, anything that you're uncertain about. Remember to subscribe to our channel so you can help us to grow, right? Share this video with anyone who you think might need it, who find it useful. And always remember to give us a thumbs up for this video. As per usual, you can always reach out to us via email or our Instagram page. So until next time for another question.